Hi, and welcome to the Halloween edition of the Stock Scores Market Minutes, October 31st, 2016. The market should not be scary. Fear in trading comes from not being prepared. You can overcome fear through a number of things. Number one, gain knowledge. Make sure you know what you're doing. Many people go into the market thinking it's easy. It's not. It's simple, but it's not easy. You have to understand what you're doing and have knowledge about how to trade. Trade proven strategies, strategies that you have tested or that have been tested and that you believe in, and test them until you have confidence. If you can't trade something that you don't believe in, you're not going to trade well. Practice good risk management. Avoid taking big losses. That is what crushes performance. Ultimately, you want to plan your trades and trade your plan. All right, let's get into this week's analysis. Here is a chart of the S&P in the short term. And you can see that on Friday, we broke down through some support. The longer term downward trend line kind of goes like this. This would be what it looks like on the daily chart. And you can see that through this week, we tried to break through it a few times. It kept failing. And then on Friday at the close, or midday, I guess, the market broke down, broke that. We're still above this horizontal support, but this is a bearish chart. Not like it's a panic sell-off, but you can see that the sellers are gathering some momentum. On the longer term chart, there's our weekly chart and there's our upward trend line. We're actually through it. If I drew that line a little better, it'd be more like this. So we're just kind of starting to tickle through that upward trend line. We've got falling tops going into that. So again, another sign that the market is nearing a breakdown, but we haven't had that emotional rush for the exit door. And so we don't really have a strong signal that the market's going to go lower. We've sort of got this weak, I'm kind of worried about the market feeling, and that could lead us to lower prices. Now on the Russell 2000, which is the small cap US stocks, it's a little different situation because there we have broken the upward trend line. Very similar situation where we've got falling tops, but the Russell has clearly broken that, and the volume is starting to pick up as well. Notice that the stock scores indicators have fallen below that important 60 threshold. So extra caution with the US small cap stocks. On the TSX, this is the short-term chart. We've actually got a market here that's outperforming. The bottoms are rising. We are testing that little short-term upward trend line, but coming off of a high, not a big deal. Looking at the longer-term chart, there was that breakout through resistance, which I said would probably lead to getting back to those old highs. Looks like that could happen. Wouldn't surprise me if we have a couple of down weeks before it gets there, but that's the path it's on. So the Canadian market looks quite a bit better than the US market. However, if the US market does sell off, if we do get a correction, it's going to drag down Canadian stocks as well. So don't think that you're totally insulated from a correction by trading that stronger Canadian market. Now, on the TSX Venture, talked about this a few weeks in a row now, just got those falling tops that continue to build pessimism after the long-term upward trend line was broken. If we break through this support, then we're going to move down to the next level, which is probably this area here. So building some pessimism on that TSX Venture, again, heavily weighted in mining stocks, which are suffering a little bit from some weakness in the precious metals. On the US Treasury bond side, this is the long-term weekly chart. Here the trend went parabolic and it pulled back to the trend line and it defined this trend line. Here we went parabolic and now we're pulling back to the trend line again. We're at the point where we should bounce soon, but if we then make a falling top and ultimately break that long-term upward trend line, then that long-term cycle of optimism in US bonds, which also means lower interest rates, is going to be broken, and this probably heads lower, which means interest rates go higher. Don't see that sign yet. Right now we're simply coming back to the trend line. We haven't broken the trend line, but if that trend line gets broken, I'll try to draw this a little bit better. It's a little bit hard with this freehand tool. We're a little ways away still, but if we have another couple of down weeks, we're going to break that long-term trend line. Watch in the short term to see whether we can bounce off of that. Very important for interest rates. Now, US dollar, because there's all that speculation that interest rates are going to go up. We've had the US dollar strong for the last 4 weeks, but this week it basically bumped up against its downward trend line and got stuck. That's what we expect to have happen. We've got optimism there. I think we'll probably pull back a little bit, some profit taking in the US dollar. It's gone up quite a lot in the last 4 weeks. And it looks to me like we'll maybe pull back short term and then make an attempt at breaking that downward trend line. What would cause it to break the downward trend line? If the US Fed raises rates, if the market thinks it's going to raise rates, that's going to probably take the US dollar higher, and of course the bond market lower. Here on gold, you can see that we had that breakdown through support back here, which was also a break of the upward trend line. And at the time I said, yeah, it looks to me like this market's going to go lower, but short term, we had fallen away from the downward trend line. So now we kind of start to work our way back up to that downward trend line before we start to move lower again. So short term, I think gold could actually come up a little bit, but longer term, that is a very important breakdown right there, and that should lead to lower prices for gold. Again, key thing, if the US raises interest rates, that's going to be bearish for gold. Now, the question is, are they raising rates once and then be done for a while, or are they going to do it over and over again? It may simply be that they do it once and gold kind of just goes into a sideways trading pattern because rates are no longer going down. But unless they're going to consistently raise them higher, I don't know that gold suffers a real sharp sell-off. I think we may just go into kind of a stagnant gold market. We'll have to see how things pan out. On the oil side, here's our little upward trend line there. And we got a little overbought, kind of went up quickly. Now it looks to me like we're going to pull back to that and then bounce. I think oil doesn't look particularly bad, doesn't look particularly good. I think in the next few days, we probably see a little more weakness. In the next few weeks, I think we're probably stuck in this sort of sideways oscillating trading range that isn't very exciting, but is better than many sectors of the market. And on the fear side, that little bit of news of Hillary Clinton's email server issues that caused the market to spike down, which caused the VIX to spike up. But look, we've had lots of these little spikes until we start to build some real momentum where we start breaking from rising bottoms instead of little 1 or 2 day wonders. Not too worried about the fear, but this is a little pickup here. And so we need to watch this chart closely, because if we start to continue and break this and really start to move up into here, then we get into panic mode, and that means more of a corrective action for stocks. So US stocks, I've got bearish in both time frames. It's not incredibly bearish, but I do think you need to be very cautious right now. The market does seem concerned about a US Fed interest rate raise, and that is being priced in slowly. Canadian stocks, bullish long term, neutral short term. They're kind of a little tired. Could see them get dragged down by a correcting US market. Gold, long-term bearish, short-term neutral. Looks to me like it could go sideways in the short term, maybe even up a little bit, but I worry longer term because of that long-term trend line break. Oil, neutral long-term. It's in that sideways range. Bearish short-term, we were seeing a little bit of selling pressure at the end of last week, and that could move us into next week as well. US stocks are slowly gathering pessimism and testing areas of support. This increases the probability of further weakness in the near term. Canadian stocks are outperforming, but may be dragged lower if the US market corrects. Gold is stabilizing, but can weaken again soon. Oil pulling back, but still above support. All right, let's do the trade of the week. This is a stock that I began accumulating right here when we had this breakthrough resistance with the action candle. It's a little hard to see, but there's a little pink dot right there, another one right there. That pink dot means that the price action was abnormal and the volume was abnormal. That's a special indicator that I have written for TradeStation, available to my active trading students. This to me looks like a chart that wants to continue higher. I am swing trading this stock, still in the trade. Got kind of dragged down by the weakness in the market on Friday, but I think it bounces off of the trend line and continues higher. So we'll see how that plays out in the days ahead. Well, that has been the Stock Scores Market Minutes for October 31st. Have a great and safe Halloween and trade well.